In this video, I'm going to talk about how I would learn to day trade if I was able to start over again from scratch. And later on, I will tell you the best thing you could possibly do to ensure profitability in your first year of trading. What's up? My name is DJ, and on Dad Think Bigger, I explore various aspects of personal finance, making money, and thinking bigger. The first thing I would do would be to save up more money and also have more income streams. Trading is mostly a psychological game. The end goal of this game is to make money, and a lot of it. But if you are in need of money, you're going to be in such a rush to make money that the way in which you do it isn't going to be sustainable. When you let the outside pressures of needs and wants into your atmosphere, it clouds your judgment. And in trading, you can't afford to have your mind all over the place. The needs and wants you have are legitimate. I have them, and so does everyone else. But just because you have them doesn't mean you get to force your will and make it work in your favor. By having different streams of income and by having money saved up, you aren't worried about needing the next trade to work for you to pay your bills. You aren't dependent on the outcome of a single trade. When you don't necessarily need trading to work, I found myself personally to be more successful with trading. I had a clearer view and was able to step back and really evaluate where I was doing well and where I could improve because I was no longer in a rush. I was able to take the blindfolds off and see that I was being detrimental to myself by trying to rush when in reality I was prolonging my success. The idea is to have money and use trading to make even more money. And the greatest part about it is that eventually, as you grow and your account size grows, you can make your combined previous income streams for the year in just one single trade. The second way to be to find a mentor that has verifiable results. The best way to get to where you truly want to be in life is to find someone who has done it and see if they will teach you. This isn't just related to trading. This is anything you want to do in life. There is someone who has done it before you, and your job is to find a way to get connected with them or intentionally study what they've done and try to replicate it in your own way. They have the blueprint. They know what it takes, and they know how to get there. Here again, I say, make sure they have verifiable results. With Forex especially, I'm not going to get a mentor that can't show me either a regulated broker statement or prop firm funding with withdrawals. If you are going to invest your time and money into someone to learn, it only makes sense to verify they're actually doing what they say they are. Offshore unregulated brokers and influencers can manipulate things in order to make it look real, to be able to make more money for themselves, and that just isn't right. They can show these fake statements, but they can't replicate the results on a regulated broker or with a prop firm, and you can guess why. Because it's fake, it's fabricated, it's not truthfully their results. If someone is truthful and they offer a service and they want your money to teach you how to do the same thing, they should have no problem showing their results. Now, they don't have to show you anything because that's their right. But if they aren't willing to, then you have to personally decide, is that someone you really want to be working with? The third thing that I would do is stick to one strategy. This goes hand in hand with finding a mentor, as they will be the one teaching you what they do. I can't even begin to explain how many times in the beginning of my journey that I would take a loss or two on one strategy and say, this doesn't work, and start to try and learn something else and trade it just to say, hey, this doesn't work either. And then moving on to something else over and over and over again. Listen here, no strategy is 100%, and the best part about it is you don't even need it to be. If you see someone say they win 100% of their trades, they are lying, and you need to stay far away from them, and I mean far, far away. But the amazing thing is you can only win 50% of your trades and still be a profitable trader and make a whole lot of money. Almost every strategy can have success of some sort, but you have to give it time to work out its probability. For example, say your strategy that you have produces a 1 to 3 risk to reward ratio. For this example, let's say you risk $1,000 per trade, meaning every trade that you win, you make $3,000, and every time that you lose $1,000. Now let's assume you win 40% of your trades using a sample size of 10 trades. Let's start off saying you happen to lose the first 3 trades, meaning that you are currently down $3,000. If you stop and switch strategies just because you lost 3 in a row, you're doing it wrong. The probabilities haven't even had enough of a sample size to work themselves out yet. The next trade may have been a winner, and let's say it wasn't, you make $3,000. So now one trade just covered all of your losses thus far and you're break even. 4 trades taken, 3 losses and 1 win. The next 6 trades you win 3, making $3,000 each time for a total of $9,000, and then lose 3 with each loss being $1,000, totaling $3,000 loss. After 10 trades, you ended up profiting $6,000, even though you only won 40% of the time. But what if you had stopped and switched strategies after losing your first 3 trades? You'd be working with a whole new realm of possibilities, probabilities, and statistics. That's why it's important to stick with one strategy and refine it and make it better as you learn more and see different tendencies in the market. Don't make it harder than it has to be and flood your mind with so many things that it doesn't need. The fourth thing I would do is change my perception of what trading actually is. When I first heard about trading, I was showing traders accounts with hundreds of thousands of dollars on the screen. I was showing all types of supercars, Lamborghinis, Ferraris, People dress incredibly nice, watches, jewelry, everything I always dreamed of growing up. I was just told that you just click a button and then you make money, which is so incredibly true. You literally click a button, and if it happens to go in your direction, you do make money. But what wasn't said is that you had to completely change your mind to get there. What wasn't said is that a lot of those people that had all these things, trading results were fabricated, and they had other streams of income, including selling courses for teaching people how to trade. What wasn't said is that it takes time to learn the ins and outs of how to trade and how to think about trading as a whole. You have to treat trading like a business, because that's what it is. The quicker you learn that, the better off you'll be. The fifth thing I would do is to use a free trial challenge from a prop firm or a prop trading competition as my demo account. I would treat it as if I'm trading my real live challenge. I personally think that if you are undercapitalized, this is the best route to go to achieve funding and then use those profits to scale your own account. For those who may not be familiar, a prop firm allocates capital to skilled traders, with some firms allowing you to trade up to $600,000 of their money. Anything you make off the account, you keep 80% of the profits. But before you get to go trade with their money, you do have to take a challenge and pass 2 different parts by achieving certain targets. Usually the first target is between 8 to 10%, and then the second target is 5% of the account, depending on the firm. If your goal is to get funded, it only makes sense to use the tools that they provide and their parameters in order to practice and gain consistency, proving to yourself that you can do it before putting money into it to go for a live account. I, on the other hand, did the opposite and lost a lot of unnecessary money trying to make money fast. When you see everyone pulling out huge amounts of money, you think you can do it too, which you can, but you also don't know what that person on the other side of that payout's journey was. You don't know what they went through to get there. You don't know how long they've been trading, how much work and effort went into it. These things take time. If you can trade under the same conditions without the financial risk, it makes perfect sense to practice before you put your hard-earned money at risk. The sixth thing I would do is to journal and document everything from the moment you decide to start trading. This allows you to capture the highs and the lows, from the late night studying to the stacks of money getting deposited into your account. Record everything, because you never know what can become of the footage. You never know who you could inspire just because they saw your story. I would also journal all my trades and emotions that were behind them. This is how you become better at your craft, by taking the time to see what similarities are being repeated, both the good and the bad. If you don't journal and study your trades, you are susceptible to making the same mistakes over and over again. Yes, journaling takes extra time, but I'd rather take that extra time up front to find and fix the little mistakes instead of paying for the lessons later with actual dollar amounts lost later on in your journey. The seventh thing I would do is to learn to be a great loser. Listen to me when I tell you that you are going to lose trades, but it's what you do after you lose that determines how far you would truly go. If you aren't a good loser, you won't make it in this game. It's easy to think after losing a trade that the market was wrong, or the market is against me, or the market took my money, I'm going to go get it back. And I'll tell you from experience, this is the worst mentality to have, because you think the market owes you something when in reality, it doesn't even know you exist. You have to learn to take losses and keep your composure, even if price barely knocks you out and runs in your intended direction. And no, I'm not saying you can be mad or feel sad or hurt. Nobody likes to lose. It's natural to have these feelings. But what I'm saying is, even though you have a losing trade, you shouldn't let your emotions take over and cause you to force trades to make up just one loss. Because most of the time it ends up in losing even more, because you aren't trading from the right headspace. The best winners are usually some of the greatest losers. They most definitely go hand in hand. Remember, whatever you want to do, start now and expect to have some struggles, but persevere, be determined, have some grit about you, and know that in the end, you will succeed. Thanks for watching, and I'll see you in the next video where I talk about 4 ways you've been programmed to be poor and how you can reverse it. Peace and love, DTB.